Okay, what I thought I'd do today is just make a quick video. Not sure how long it'll be, but of a couple of trades in the market this morning. But I always start out the process here at the website, and I look at the pre-morning market, and then I look at the Bloomberg calendar. Okay, so this tells us, you can see the legend. Where's the legend at here? It's market moving indicators. So this tells us the legend. And I look at the market moving indicators, and that was at the 8:30 time frame. And so I can see that I'll take a look at 8:30 and see what is happening there. And then I'll look at the pre-market open. Um, let's do that. I can see it's slightly down. It doesn't necessarily set up my expectations, but it gives me some idea of the sentiment right before the open, and I try to calculate the reasons for that. Here's the world markets here. Here's the currencies. Some things it says to know before the market opens, so I look at that. And then here's the world markets again, which we saw in the other thing. This just shows a graphically representation of it. So take a little look and see, especially maybe what's happening in the DAX and things like that. Okay, so, and then I will also take a look at the forecast, and that's right here. Okay, and it's by David Weiss, Stock Market Update, and it is telling us what the expectations are for today, what he thought of the price movement, and some price targets. So that's a good idea to have in mind. Of course, he always tells you, well, here's the upside and here's the downside, and so those are things to consider, and it gives some reasoning to it. And those are the things to consider when we're looking at what is happening in the markets today. So now we'll go over to the website. Now, for the sake of the website here, I'm going to call this oscillator down here, this where it has the high and the low. Well, in the middle here, I'm going to have the inflection oscillator. And this will have a momentum line now and an inflection point line. And let me do this. Then this one down here is just going to be the range oscillator, and you recognize this as the range points. Well, these range points show up on every bar, whereas on the price line up here, it just shows intermittently, and these are bridged ranges for the bars. If there's ever one above it, that's the absolute range of that bar. And here is just called the energy indicator, and this is the RTM, regression to the mean line. So that's the terminology I'll be using. Then over here we see these are the different time frames that I use. I use the 750 tick bar chart, the 1500 tick bar chart, and the 30-minute. I use the 30-minute here to kind of give me a representation of trend, and I try not to trade against whatever color the bar is showing here. So, but I also use the legend down here of the volume with the color-coded bars. And as you know, these color-coded bars are binary, giving you one option or another. In particular, I pay attention to the magenta and the white bars. The magenta bars actually say it's going to be a move up or it's the end of up, so that we see it's magenta here and it's moving up here and it's magenta here and it moves up here and it's magenta and it moves up. Here's white and it has a little down here. Here's white and it's a little down. So I tried to pay attention to that, and if you were just reading these bars, of course, you'd see that the green means move up or consolidation, so you'd see this candle here with wicks on either end, and so you could see that there's some consolidation here, and then it does move up. The red is just a continuation, either the end of a trend or a continuation of a trend. So I bear that in mind. What is going to happen? Like this magenta line right here says that it's either the end of up or it's going to move up. Well, usually I expect it to move up when I get these. It's a large volume bar, and you see the volume here. It did move up to here, but then now it's creating a tail to it, and it's coming down a bit. But I wouldn't be surprised to see, because of this magenta bar, these kind of set up some expectations to help with your judgment. I wouldn't be surprised because of this magenta bar to see that it going up some from here. Of course, this is the matrix, and this is what we'll be using for our trading over here, and we'll see that when we take a trade. We get over here, and again, as I said, we have the 3 time frames. I use the 750, and then here's the 1530 minute. But then I have another chart over here, which this actually is the Emini futures chart, the S&P Emini future chart on a daily chart. So it gives me some idea of what's happening. I can look and I can see, well, that was perhaps a resistance point. Maybe it broke through it a little bit. And as the forecast pointed out, it is in an up channel a little bit. It's recovering from this downslide here some. But there can still be expectations that it would come down as well. So this is the daily chart, and so I look at that also. Again, all these charts are just to manage the expectations when I'm trying to read a more narrow time frame, which is the day trading time frame. So the first thing I'm looking at over here is and one of the main indicators again is this inflection line. Remember, this oscillator is now called the inflection oscillator. So one of the main indicators to look at is this inflection line, and of course the real important points are when the momentum line cuts through it. Right here you see it cutting through it down, and prices going down, and of course you see it cutting through it up and prices going up. So you pay attention to that. That's the first critical point. So the inflection line you look at first, and you look at what is happening with the momentum line in relation to the inflection line, and then you look at the inflection line and the momentum line in relation to where are they in the oscillator. Well, this is the midline, and actually it's a fairly important line, and they're both in the upper half. They're both of the oscillator. They're both above the midline. So that says that at least on the 1500, price still has some strength. And the only way that you use the color codes on the momentum line is that when price is in an uptrend, you can use the green as a confirming signal, and when it's down in a downtrend, you can use the red as a confirming signal, but that's the only time. So if it's in an uptrend, you can't use the red signals to say, oh, well, it's going to reverse or it's going to get weak here. That's not what this oscillator does. So then we look at the same oscillator over here on the 750 time frame, and we see again it's above it, but now it's cut. The momentum line is cut through it, and it's cut through the midline as well. So we evaluate that. We see the range starting to narrow over here on the 1500. It already has narrowed. When this range compresses enough, these lines, the upper bound and the lower bounds, will turn yellow, and that to me reflects a time where the inactivity is both too small and too unsure of what direction it wants to go in, and that just represents a no trading zone. So just looking at it right at the moment, I see that on the range indicator right here, and again, this is the upper bound, the lower bound, and this is the pullback line. This line is equally, if not more important than the midline on the inflection oscillator, because you can see that where price can go to what other oscillators would call overbought or oversold condition, the range oscillator will give us a kind of a good picture of the real sentiment, because it gets to the pullback line and it can't get above it, and it pulls back, even though price has gone up here and it considers it oversold. It's at the pullback line, and it can't get above it, and it retraces back down, it pulls back down. Okay, so over here on the right hand edge, and that's where we always want to read the chart, we see that the range line is starting to cross the pullback line. That's a unique feature of this. And over on the 500, it's already above the pullback line. So I might associate those two with this magenta bar over here. I guess I should mention that this chart right here is the NYSE tick chart, and I have it on a 1 minute time frame. And what I do is I just arbitrarily set a high and a low, and I use those kind of it's overbought and oversold conditions. And you'll see with a high degree of accuracy, when this goes above this, price will pull back, and when it goes below it, price will go up. And you can set that up on a chart yourself and verify that. So that I look at these oscillators, and in particular the inflection line, and then I look where the lines are here on the range line. Is it above or below the pullback line? Well, now this is above the pullback line. You can see it just crossed over right there, and on the 500 it's above it. Okay, it's above it here. The inflection line is and the momentum line are both above it, so that's giving more credence to this magenta line. That just went from red, and now, well, it's struggling here with supply and demand. Now it just went green, even though on the energy we we know the green bars are strength and the red bars are weakness. And the way that this goes usually is when this goes down, especially if it's in an uptrend, this will go down to the 0 line, and that will represent a pullback, just like it does here. Okay, the market's just started, like it did here, and it will go up, and same thing if it goes down and gets low, and then it'll go up. Of course, if there's a lot of supply, this will go down underneath, and it'll be red. So, all right. So let's look at things here. We see on the 1500 that its price is kind of going down. It's a very beginning of the market. I know in a lot of the stock and equities trading, they tell you don't trade the first part of the market, but actually this is the first part of the day from 9:30 to 12:30 is when you're probably going to catch a trend or a trend reversal, and it'll swing more. Whereas in the latter half of the day, from 12:30 to 4, it quite often will continue in the direction that it's going. So we're looking just to see how this is going to go. So again, we have another magenta bar here. So I kind of have the expectation that price is going to advance. This is above the line. This is coming up. So if we were to put on a trade, we'd go over here and we'd kind of put in our price here, and then we'd start watching the market to see if it's going to go in our direction, if our analysis was fairly correct, and it's going to go up. So we see on the 500 or 750 that it is coming across the midline. The momentum is coming across. It just cut through the inflection. This cut through it. So we might expect that to go up some. So now we're adjusting that, bringing it a little bit closer to price. So what we're trying to do is to buy into strength or vice versa, sell into weakness. Here we think maybe the market has some strength. Now, this is always a tricky time to trade because the inflection line oscillator, as we know, moves. Here, I'm going to take this trade off as I explain something here. As we know, it moves from high to low. Actually, this is not a low. So, well, indeed, it could be a low because it moves from high to low. And here, perhaps the low is just the midline, which says that price also would want to go higher because it doesn't want to get below the midline. But this is more indicative of what I was saying. We know that this inflection line goes from high. That's the midline again. Let me see if I can find what's more indicative of what I'm speaking about. Here we go. All right, so it goes from high to low. It goes from the upper bound to the lower bound. And indeed, we can see this was nice, and of course it worked out very well. So these are high probability points. It worked out very well with the RTM and the timing alert dots and everything lined up here. We have a timing alert dot to the downside. We have a weakness here in the energy. We have the inflection, the momentum line crossing the inflection line, and we have the range cutting down from the top. So all those indications would give us, a good short signal, and it does indeed go down. Here's the inflection line. It does indeed go down, and then we get the timing alert dots again to potentially take it to the upside, and everything is also setting up. Here we have the momentum which was below the lower bound, and inflection, which reached the lower bound. It cuts through, the inflection line starts going up, and the range cuts above it. So these are higher probability times to trade, whereas these are more tricky times to trade, and you have to become more adept at both reading the market and using the trading technique. And you can see this is exactly why we use that trading technique where we placed it up there. We thought maybe the market is going to go up, and I still think that it absolutely could because of the magenta line. It's quite possible, but the timing wasn't right on it. And so we didn't want to get caught in that downdraft. Now it looks like it's starting to gather a little momentum, and it's coming up. So maybe we'll move up ahead here. So let's go ahead and we'll move here. Oops.
Order filled.
And now the order got filled, and we'll see what happens. But that's how you do it. If you think that that you're when it's on the right side of it, you're going to go ahead and move it up. These moved up. These are above the midline. So we'll see what happens with the order here. You can see I'm trying to take 1 point.
Order filled.
And you can see there's the order. So that's how that's done. I hope that video helped, and we'll make another one again. So that's it for today, and we'll see you on the next video.